Hey everybody, Boris Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar for December 4, December 8, 2017. And I think the interesting story in the commodity land, of course, is that while the levels themselves have essentially stayed the same, tremendous amount of turbulence in between and lots of very interesting stories. This week, it's really going to be dominated by Australia and the fumes of Canada, because really Canada doesn't have any data this week, but it's the reaction to past week's data that it was just so tremendously powerful that I think could have lasting and lingering impact on CAD trades. So we're going to be watching those two COM dollars primarily, with Kiwi really kind of taking backstage for the time being. The levels pretty much stayed the same. It's a 75-77 level in Aussie. It's a 26-2900 level in CAD, 67-69 level in Kiwi. But in between, there's been quite a lot of changes and turmoil in the levels. Before we get to that, let's just take a look at the calendar. There's really only primarily Australian data front of the week, which is retail sales and the RBA decision. To me, this is going to be fascinating. Now, Kathy is bullish the PMI services index, but not necessarily retail sales. To me, that's a much more important factor. And I think, I'm not sure, but I think retail sales could be weak because labor was weak. Labor growth was weak, wage growth was weak. All of those things could result in yet another disappointing number for retail sales. Whether that's going to have any material impact on our RBA statement, hard to say, but I already starting to sense the RBA is much more neutral dovish than neutral hawkish in its statement, because I think maybe in the last statement, it sort of made this this overture saying that the risks to the downside are as much as risks to the upside, meaning the risks of a rate cut are as much of a possibility as the risk of a rate hike. That's a much less hawkish central bank than you would think would be, or even much less neutral central bank than you would think it would be. And there's a possibility, I think, for that kind of downward talk by the RBA. So certainly worth watching. I think that's going to be the big story front of the week for all of the currency market, because Australia kind of dominates on the economic front. Moving on, there's literally nothing else of any import on the COM dollar land. We have IB purchasing, IB merchandise, trade balance out of Australia, which Kathy is bullish because of the PMI manufacturing numbers. And what else do we have? And that's it. There's just there's no CAD data end of the week. There's no Kiwi data at all. It's really front of the data, Aussie data. And the of course CAD data that's fascinating is we had just blowout numbers on employment that completely reconfigured market's conception of the strength of the Canadian economy. The Canadian economy appears to be doing much better than the market originally thought. That really opens up the road for the Bank of Canada to turn hawkish one more time. Remember, the Bank of Canada kind of decided to hold off because A, the Canadian dollar got too strong, B, there was a wobble in the Canadian economy, and they just they didn't want to dampen off the growth. But they're still struggling with the existential question of the housing bubble. There is no greater housing bubble in the world than the Canadian housing bubble, and it makes the Australian housing bubble pale by comparison. And while the Canadians are much more responsible than the Americans were in terms of trying to make sure that they're not financing the housing purchases with zero money down, there's still such a massive gap between the average income and the average housing cost in Vancouver and in Toronto that Bank of Canada is certainly very much trying to dampen, and really in a perfect world trying to really knock down housing prices for foreseeable future. So their only instrument of use here is the interest rate structure, which means that they could potentially begin to move to a more hawkish posture. Either way, the market certainly took the trade on Friday with gusto, and dollar Canada moved 200 points, the biggest move it's had in months. So continuation there, quite likely, given the fundamental shift towards towards a greater likelihood of BOC rate hikes than before. So let's take a look at the charts here. And we might as well start with Canada, because look at this massive move. This is a 200 pip move, huge move into very, very key support here. This 2,700 support. So bounce back, not at all unreasonable. Canada is kind of notorious for making sharp moves and then bouncing back. This is you can see like right over here, here's an analog where make a sharp move, next day is a bounce back, but the overall, the continuation of the move is very much to the downside, right? This certainly sends a very strong downward impulse signal for ultimately a move down to 2,400. So to me, this is a very, very interesting trade here in terms of possibility. Albeit you might have to be a little bit patient or be willing to absorb some natural retrace in this move before the move to the downside happens. But this is one of the strongest price signal impulses we see on the charts this week, and certainly dollar counted to the downside on an absolute or relative basis is one of the most interesting trades. And we'll talk about that, of course, in the crosses as well. Now, Aussie, on the other hand, did have a small bounce, but couldn't hold the highs, and really still looks to be at this 75.50 test zone for all intents and purposes. So it'll be fascinating to see what happens come Monday, if we're going to get any kind of a boost from the Australian data, or whether it's going to start to drift back towards the 75.50. Aussie, to me, still looks like a dead cat bounce for the most part, although this 75.50 double bottom needs to be respected, and only if the 75.50 is breached to the downside can you convincingly say the downtrend continues. For now, downtrend isn't a pause. We have a modest double bottom signal, but we really in order for Aussie to be a truly bullish signal, we'd have to see the 76.50 get taken out. In other words, we'd really have to see a concerted move towards the 77 handle to confirm that this indeed is a longer term meaningful bottom for the Australian dollar. And Kiwi doing its thing. Kiwi actually very similar signature as Aussie, sort of a modest double bottom signature. We certainly held that 67.50 quite nicely, but need to really push through the, in this case, probably around 69.30, 69.40 for a truly more meaningful move towards the 70. In other words, both Aussie and Kiwi appear to have made a modest bottom, but the risk of a return back to the lows still remains in place, especially with the with the fundamental data that we have on Monday. So to me, that Monday night to us, Tuesday night to you guys in Australia, of course, and that's going to be, I think, the most interesting story front of the week is how will the fundamental story flow through the prices at the front of the week for both Aussie and Kiwi. The one key, really clean takeaway from all of this is that Canada rules the roost for now as a very, very strong impulse to the downside. Wish you guys the best luck, the best trading. Boris, over and out.